Welcome back. Well, for the mid-cap index, it's flattened out a little bit. You'd have to say that it's consolidating the markets at this point in time. The Bank Nifty is up around 61 odd points, but it is a lot about specific stocks. So let's discuss one particular stock within the entire healthcare space. Rainbow Children's Medicare is the one that we're talking about. The stock has gained around 37% this year. But there is some concerns with regards to one of their parameters, which is the EBITDA to occupied bed, where Kotak Institutional Equities in their recent note indicated that Rainbow Children's Medicare is likely to report the lowest EBITDA per occupied bed, a growth of around 3% CAGR in the next couple of years. This is factoring in the expansion plans that the company has. Do note that this is the lowest among the stocks under coverage for Kotak, and it comes after the company has reported the highest EBITDA occupied bed in FY23. To discuss this, we have with us Dr. Ramesh Kancharla, who's the chairman and the MD of the company, joining in. Dr. Ramesh, welcome to the show and thank you very much for joining in. For the benefit of our viewers, can you just take us through first what is the EBITDA per occupied bed? How relevant a parameter is it? What is it tracking right now? And why is there an expectation of a slowdown?
Okay, so thank you very much. So I don't see anything major difference from what it's been for Rainbow. So this year we have about 270 bed addition, which is going to come into operations. So obviously that's going to kind of have some effect on the overall some degree of pressure on the EBITDA. But the top line growth is going to be the kind of north of mid-teens. That's what I would expect. Now this current year, the first quarter is actually, normally it's a seasonally neutral quarter, so which we traditionally see. I don't think we have seen anything different. The high ARPOB in the first quarter is because of the obstetrics as well as a lot of surgical and a lower ALOS. That resulted in the pretty high ARPOB. So we have to see this business as a yearly business. So when we look at the yearly, that whatever we have guided, our ARPOB growth has to be 6% growth of ARPOB. So and our top line growth is going to be about north of mid-teens. That's what I position our business for the year.
Okay. Mid-teens growth for the full year is what you're saying in FY24, is it?
Absolutely, yeah.
Okay, got that. So you said that, earlier you said occupancies would also improve further and you've guided for 50% occupancies, 50% plus occupancies in FY24. What's the latest on that and what is the guidance by the end of the year?
No, I think the Q1 is generally about 40 plus occupancy. That's what we traditionally see. The Q2 now where we are in, things have kind of much improved. And also we all know that this year monsoons have taken a little slow pace, and also it's come probably about 3 to 4 weeks late. So our business also get adjusted according to that. I would right now we kind of are pretty busy, and we expect to do a Q2, Q3, and moving on to Q3, Q4 well. So that's how the business year on year, some changes will be there. But overall, yearly, we kind of achieve the 50% occupancy, even with the addition of the beds.
Okay, all right. So you will achieve that 50% occupancy despite the expansion of beds coming through. Doctor, I wanted to understand one particular factor that you brought up, which is your average revenue per occupied bed, which has risen and you expect it to be in mid-teens for the entire fiscal. This corroborates with the other parameter of the average or the ALOS, or the amount of time that a patient spends in the hospital, declining. But is that also because there is a medical inflation which has taken place and hence there is a pass on to the customer which has taken place, which is helping your average revenue per occupied bed? And it's not just the increase in surgical revenue. It is this inflation which you are facing, which has been passed on.
I think it's more of a case mix and also the revenue increase, which what you do in the beginning of the year, which comes as we move into the more occupancy stage. When you get to kind of hospitals get busier, you have a lot of seasonal business coming in. So when you have a seasonal business coming in, they are very short ALOS, and also the low price business. So that will get moderated. But still, our guidance is always kind of a 5 to 6% ARPA growth yearly. That's what we see.
Okay. 5 to 6% ARPOB growth yearly is what you're guiding for?
Exactly.
Okay, got that. I also want to understand whether medical tourism has come back in a big way. I ask because, you know, your peers, for example, Fortis saw medical tourism rise almost 30% on a year-on-year basis. We were speaking with the management of Max as well. They spoke about an improvement in medical tourism. So at your end, have you noticed a big pickup? If yes, what has it been and what is the percentage compared to your overall growth?
We are very nascent into the medical tourism, actually, as a pediatric hospital. But however, kind of we started working on international business for the last 1.5 years. It's pretty encouraging now. We are kind of seeing a upstick in the international business. So we expect about 3% of our business to be international, which is, according to me, it's pretty impressive for a hospital which is just beginning to focus on international.
Okay. All right. So it's just about 3% from international patients. Doctor, you know, the other trend which is being noticed now is a lot of PE interest in the entire hospital space and a focus on specialty healthcare. Is that a space that you're considering via M&A, say, for example, specialty healthcare? And have you probably also been approached by PEs for any kind of incremental stake?
I think we are, very recently listed about less than 1.5 year time. So we have a kind of our business plan to add 1,000 beds in the next 4 years time. I mean, we have a cash on the balance sheet. I think we are pretty healthy in that way. So we don't see any reason for to explore the PEs to coming into in our business.
Okay, and further M&A from your end, would you be looking at expansion via M&A, via specialty healthcare or parallel fields to pediatrics?
As you know that not many children's hospitals are available for the M&A. I mean that children's hospitals, not boutique centers. So therefore, there are a couple of them are there. I think we keep discussing on and off with the people. But when there's an opportunity comes, that of course we are ready to look into that. As long as philosophically we don't disalign, we align to the businesses where we have a play to where we can add the scale to those businesses.
All right, we'll leave it at that, sir. Thanks a lot for joining in and all the best. That's Rainbow Children's Medical Hospital talking about the growth that they see in the business and the pickup over the next 1 to 2 years. Let's slip into a quick break.